So what's expected from the banks? I mean, before the results were released, everybody was bullish about Kenyan banks, expecting profits around 40% on average.
Just a minor correction, the note that we published, you actually released it on Monday, and it was actually covering the whole banking sector in Kenya and focusing on KCB and Equity Bank as the two listed companies that we have reinitiated coverage on. As you said earlier, the profit expectations for 2010 were actually in line. They were north of 40%, and the best performing bank was actually KCB in terms of bottom line performance. Its profits were at 7.3 billion Kenya shillings, which was much higher than what the local analysts in the market actually anticipated as a whole. Highlighting our views on the report, what we are saying is that we think the Kenyan banking scene is structurally very attractive. We expect credit penetration, credit growth to grow by anything between 25 to 30% for this year, and this is on the back of high deposit mobilization last year. There's also a push by the Central Bank of Kenya to enhance access of credit to the lower end of the pyramid through different innovative products, the likes of M-Pesa, the likes of M-Kesha, the likes of EcoPesa, some of this being partnerships between local banks and local telecom companies in terms of enhancing access to financial services.
All right, Mbithe,
so I think...
Where are the upside risks, for instance? I mean, there's inflation that's starting to creep through in Kenya, and there's a sense that, you know, despite very optimistic projections for growth, this is definitely going to have an impediment for the loans that banks issue and the likely impairments that will come from that in the next financial year.
Two curious that we identify in the Kenyan banking space. The first is what happens if it doesn't actually rain. If the drought comes on board, then that becomes a risk in terms of non-performing loans. Kenyan banks are highly, have actually given a lot of credit to personal households, and this year they're all focusing on growth within the SME sector. If it doesn't rain, the bulk of the informal sector and also part of the formal sector is actually affiliated to the agricultural sector, which is about 25% of GDP. So if the weather actually becomes dire, that means slower GDP growth, and we actually have our GDP focus at 4%, which would mean increased provisioning levels by these banks, which would actually eat into the profitability for the year 2011. That's what we see as our major risk for this year 2011 on the Kenyan banking scene.
Let's talk about other resource streams or income streams for banks, issues such as administrative fees and bank fees, in terms of how they influence the balance sheet of banks. Is that a major issue in Kenya? It's a major issue in South Africa because in some instances, you know, non-interest income constitutes over 17% of their revenues.
In Kenya, there's been an aggressive push to non-funded income last year and this year. For Equity Bank, it's always been doing slightly over 60% before 2006, and it's a position where it wants to get back into. But the bulk of the revenue that most of the Kenyan banks have been reporting has been 50% related to the interest income. But there's also a push to earn as much as they can on the back of the innovative products on agency banking and on mobile banking, so that as they provide access to financial services and to financial products, and they'll be able to earn in terms of the provision of that service to the end of the market.
Okay, going forward, and a final question, Mbithe, we know that Kenya is very active in terms of consumer lending, as you mentioned, and increasingly momentum for SME business support. Things such as mortgage lending, for instance, long duration lending in that respect. How much impetus is there for that? Because when you speak to some of the housing financiers, this is the trickiest element for them. The demand outstrips supply simply because bank credit doesn't move fast enough in that sector.
There are different stakeholders actually having discussions and coming up with solutions to address this issue. For instance, the local mortgage companies, Housing Finance, Kenya Commercial Bank is also applying that space. I'm in constant conversations with the CBK and trying to come up with mortgage-based lending and trying to source longer-term financing in terms of deposits to be able to do this. On the local end, in terms of supply, the National Housing Corporation in Kenya is actually actually setting up a plant to be able to provide prefabricated material, which will actually reduce the cost of housing. So I think they're different initiatives and they're different players. The issue has always been supply, but now all the stakeholders in Kenya are actually working to address that supply issue. And I think on a final note for me, as we look at the Kenyan banking sector, I mentioned earlier that we are looking at KCB and Equity Bank. We're very favorable on Kenya Commercial Bank, more on its operational leverage. We saw the company raise capital last year. It's actually trading at a very discounted level at 1.4 times book compared to Equity Bank, which is at 2.6 times book. So I think KCB looks very interesting. Equity Bank is still a very good story, but the valuation is also very rich. So if you're looking at the Kenyan banking sector, then it makes sense to begin to look at KCB quite aggressively over now 2 to 3 year term. It'll definitely be a different story to tell.